Nasdaq has been pretty much in a roller coaster ride nowadays. Every day you're seeing the stocks going down, and Nasdaq has almost lost 1200, 1500 points from its high this year. Well, most of the stocks, especially the Magnificent Seven, which was fueling the market, and the Nasdaq, has been pretty much down right now. If you talk about Tesla, it's 20% down, Nvidia 12%. If you look at Apple, it's pretty much 10%. So is Microsoft and others. Guys, no need to panic. If a stock has gone up 200%, so most of the stock I'm talking about have gone 150 to 200%. If they have gone 200% in 6 months, don't you expect them to come down 20, 30%? It's pretty normal. That's how the stock market works. And the market guru Warren Buffett says that if you are in the stock market, be prepared to see your stocks going down in value by 50%. Yes, you heard that right, 50%. In fact, Berkshire Hathaway has gone 2 to 3 times down to 50% of its level. So if you believe in the company, believe in the technology, if it's within your circle of competence, stay put till there is a fundamental change in the company or in the management. Well, when we are talking about the 7 magnificent ones, what about the small ones like C3AI and the Palantir? Guys, Palantir dropped as well. In fact, it announced its result recently, the Q2 earnings report, and after that the stock has been hammered. Having said that, it actually hit a 52-week high of 2024 on 1st of August this month. But don't forget, its 52-week low was $5.84 on 23rd of January this year. So in 6 months, you are seeing a huge fluctuation from roughly $6 to $21. And now it has gone down to 15 something. Last night it closed at 1440, 20% drop. When the big ones are dropping, why not small ones? So no need to worry about it. Hello everybody, and once again welcome to Sinhanomics, the money machine. By now you have understood I'm going to talk about Palantir, because it just recently announced its earnings report, and after that there has been some big hammering going on the Palantir along with the other stocks as well. Well, right now at 1440 it's sitting at around $28 billion, $29 billion market cap. And based on the earnings, etc., if you look at the price earning ratio, it's right now, with the forward looking, is at 68 PE. From the price to sales ratio perspective, PS ratio perspective, is actually trading at 15 from the forward earning perspective. Slightly higher, I would say that. I would love to see that pretty much at 50 PE at this stage, and something like 10 to 12 PS, price to sales ratio. That would give me more comfort. Having said that, it has already corrected from 2024 down to 1440. It's giving a good opportunity out there for some of you who don't own it. For some of you who believe in the dollar cost averaging, probably is the right time to do that. If you don't believe in that, just wait, because when you do the analysis, we'll do the fundamental analysis now, but if you look at the technical analysis perspective, after hitting its 52-week high of 2024, it actually dropped, and its next support was around $17. It has breached that level as well and dropped down to 1440. Guys, that means it can go down to $13 before bouncing back. Its next resistance right now is now 17, and if it crosses 17 with good volume, I think it can easily go to a range between $20 to $23. So stay tuned. If you believe in dollar cost averaging, you can go ahead and do that now. If you don't believe in that, wait till 17. Wait till Palantir crosses 17 and then buy it. Well, let's analyze the report it actually announced, the earnings, Q2 earnings. The revenue was $533 million, which was a 13% growth, 13% growth year over year. And if I look at the two different segments, commercial revenue actually grew 10% to $232 million, and the government, which is the majority of that, even now is like 60% of the business, also grew 15% to $302 million. Yes, guys, it's growing both its levers, the government and commercial, at 10-15%. So from that perspective, the result was pretty okay. If you look at from the billing perspective, its billing grew 52% to $603 million. And if you look at from the customer base perspective, its customer base actually grew 38% year over year. Yes, you heard that right, 38%. So it's actually increasing its customer base as well. When we look at the other parameters, for example, it's operating income. Operating income was pretty much $28 million. So adjusted operating margin was at 25%, slightly better than what the market was expecting, and that was 24%. So 1 percentage point better than the market expectation. Cash flow from operations, pretty much $90 million, which translates to around 17% gross margin. And if you look at the adjusted cash flow, it was at around $97 billion, roughly 18.5 GM percentage. Cash and cash equivalents, it's sitting at around $3.1 billion, guys. So it's a cash rich company from that perspective. With 2 billion annual revenue, 3.1 billion cash and cash equivalent in the books, it looks pretty healthy to me. The only thing it has to focus right now, which everybody will agree, is the profitability, which actually is trying to do that. From the earning per share perspective, the GAAP adjusted EPS was 1 cent per share. In fact, I was expecting it to grow a little bit more, because even the last quarter was 1 cent per share. So, but the adjusted EPS was around 5 cents per share. I think the earning per share should grow now. Palantir should give a little bit more focus on the profitability than driving the growth in the business and the customer base. Having said that, we'll come to that later when I'll talk a little bit about the stock dilution. It has been diluting stocks drastically. So we'll talk about it later. Let's look at some positives. What is driving this company? And guys, the shift to commercial and the growth in the commercial space at 10%, etc., is actually giving it a right balance, right revenue mix in the top line. The secular tailwind in the AI and the ML space, artificial intelligence and machine learning market, is actually giving it some additional ammunition because that market is growing. The non-cyclical government revenue actually gives it a buffer so that in the lean period it can be a little bit insulated, unlike other companies. And at the same time, if you look at its focus on the modular sales is actually giving it higher penetration in the commercial space and upselling as well. I'd like to focus your attention as well that actually it rolled out a product called AIP, Artificial Intelligence Platform, in Q2. And this platform actually provides tools for the organizations to harness the power of large language models throughout the organization. Yes, you heard that right. AIP, Artificial Intelligence Platform, which Palantir rolled out in Q2 this year, is actually giving the tools for the organizations or its customers to harness the power of artificial intelligence through LLM, large language models. And that is a very positive thing for the company, because the company was pretty much into the big data. Right now, it's going pretty fast in the AI and the large language model space. Now, having said that, let's also analyze the company from the trailing 12-month basis, because the company is not really in big profit is unlike Nvidia and even Tesla and others basically. And we are talking about in this space Microsoft, Nvidia, they are pretty much like large companies giving huge profits. This company is just giving 1 to 5 cents EPS. So it's very important to look at that, how its growth has been and the performance have been in the trailing 12 month to give a yearly view. So revenue from the trailing 12-month perspective was 1.98 billion. Yes, roughly $2 billion. Also, it has given a good estimate, like a forecast or the guidance, that this year 2023 they will exit at $2.2 billion. So there has been a growth in the revenue between 13 to 20%, I would call it. And also from the income perspective, the net income in the trailing 12 month, for an example, is actually negative to 255 million. So the profit margin is pretty much from the trailing 12 month basis, TTM basis, is 12.9% negative. That said, the gross margin for the full year, like the TTM gross margin, is sitting at 78.7%, guys. Yes, you heard that right. 78.7% gross margin. What does this mean? That means that the company should focus more in the profitability now. And they can continue their drive for increasing the market share as well as the increasing the customer base, but they should focus a little bit more on the profitability side. Maybe from the pricing perspective, they should consider increasing the price point, especially with its government accounts. Well, it recently actually announced $1 billion share buyback on 8th of August. And that has got a lot of criticism, that why share buyback right now? In fact, the share dropped from $20.24 down to $15 after the results were out. So on 8th of August, it announced $1 billion worth of share buyback. The criticism there, which is correct in my opinion, is that why now? Why they are doing the buyback now? They could have done the buyback when the stock was trading at $5, $7, $8, like that. Having said that, guys, buyback is not bad. But if you really look at how it has been diluting its stocks, shareholding, you will be surprised. By the end of 2019, it only had 714 million shares issued. And by the end of 2022, as of now, it has 2.06 billion shares. Yes, you heard that right. It has been diluted from 700 million to 2.1 billion shares. And that means 3x dilution. So on one hand, you're diluting your shareholding. On the other hand, you're spending $1 billion to buy back. This doesn't make much sense, frankly. And some of these things Palantir should stay away with. Again, another criticism I would call that, and also is a fact, is that with the growth in the profitability, looks like it will take even longer time for Palantir to grow its GAAP profitability. Guys, some of you who are new, GAAP is generally accepted accounting principles. So the GAAP earning growth has been slow, and that means it will take a little bit more time for Palantir to grow its profitability to a respectable or reasonable level. Having said that, some of the managements, or the management team I should say, are not very popular among the Wall Street analysts. That also is adding some challenges to this. Guys, as I mentioned to you, that it has given a guidance of $2.2 billion revenue by the end of this year, and that will also translate to something like an income of 576 million. So from that perspective, it looks healthy. It has to look at a little bit more on the profitability, as I talked about it. The other big news or the big possibility is that by the end of this year, it may be included in the S&P 500. Yes, you heard that right. It may be included in the S&P 500, and if that happens, you will see a fueling effect in the price, because all the index funds, most of the fund managers who are managing very specific ETFs, etc., they will have to purchase it. And if that happens, the stock will have a very stupendous run, I would call it. Having said that, one of the conditions for that, other than the market cap, is the company should have 4 consecutive quarters of positive earnings, and that is the GAAP earning. So depending on whether Palantir is going to deliver the next 2 quarters the positive EPS from the GAAP perspective, it may or may not be part of the S&P 500. Having said that, the management has been talking about it, and looks like there will be a focus definitely to increase the earning per share. When the company is spending $1 billion in stock purchase plan, definitely they are thinking about increasing the earning per share, which is sitting at a ridiculous 1 cent per share. Having said that, at least the company is in profit, guys. Unlike C3AI, etc., they are pretty much in loss. So if you look at, other than the large companies, the Magnificent 7 AI plays like Microsoft, Nvidia, Adobe, etc., AI, which is C3AI, and Palantir are the only 2 companies, in my opinion, which are pure play AI stocks. There have been plenty of them. I'll release a separate video on that, the AI penny stocks. But they are penny stocks. You can't believe in those. These stocks are pretty much at $30 billion mark. So they are not, I won't call them penny stocks. And if there is a possibility of getting included in S&P 500, guys, it will be in the top 500 company of US. Another important thing is that Forrester in its wave of AI/ML. So Forrester's Artificial Intelligence and Machine Learning Wave report of 2022 has put Palantir pretty much in the leadership position. And that's a positive sign for it. Well, if you believe in dollar cost averaging, probably the company is giving you, or the stock is giving you an opportunity to do a dollar cost averaging. If you don't believe in that, which I don't, then you wait for the stock to start going up. And as I mentioned, from the technical perspective, now its next resistance is $17. Once it crosses $17 in a heavy volume, this stock can go anything between $20 to $23. So wait for $17 to cross the breakout, and then you can buy that. Having said that, all these are my personal views. Please consult your financial advisor for any investment decisions. Guys, I leave you with a thought. The steel industry produced its $1 billion company in 1901. Yes, in 1901, the steel company, the first steel company in the world, had a market cap or valuation of $1 billion. After that, it took 117 years. Yes, you heard that right. It took 117 years for the tech giant Apple to reach a valuation of $1 trillion. But with the tailwind in the AI and the ML space, I won't be surprised that you will see more and more companies hitting the $1 trillion mark. If you look at right now, most of the Magnificent 7 are pretty much trading at that, closer to $1 trillion or above $1 trillion. So artificial intelligence, generative AI, accelerated computing, and machine learning is giving a big opportunity out there for the whole industry to transform. And if you can catch some of these companies when they are young, you will be in a much better position from the investment perspective. With that thought, I will come back again with some other company analysis. Guys, this is the reporting season. Nvidia will be reporting its earnings next week. So will be the other companies like Hewlett Packard, HP Inc., HP Enterprise, and some others as well. All these companies are pretty much into the AI play now. They're working with their suppliers to see how the whole PC industry can be transformed with this AI wave. And I'll cover a separate video on that. With that, remember, if you like this kind of content, don't forget to like, share, and subscribe. Synanomics is out there to create financial awareness, to tell you and teach you how to analyze the companies, understand the company financials and its forward-looking statements and future plans, so that you can analyze your own companies and make money. With that, it's a goodbye from your finance guide, I would call it, finance coach, Pankaj Sinha. Bye-bye.